So Thomas, Mike, I would like to learn how to use PowerOptions to take directional calls or puts on a stock that is running after earnings. Can you help me with that type of search using the tools? Well, I guess the best way to do it, I would go into long call, going right into the search for long call. I think I can make this work, but I'm not sure. So I'm going to clear the filters. And you're not necessarily, well, you're looking for good directional calls or puts on a stock that is running, you had mentioned, after its earnings. So what's tricky here is, Thomas, I don't have a guideline for which expiration date you would choose. I use a different tool for that based on what my assumptions are. But let's say I wanted to look for something that had earnings within the last 7 days, perhaps, and I'm just going to go maybe 30 days at a time. So I'm going to go all expirations, let's say 30 to 55 days. Okay. I'm going to try to just focus. Now, I'd probably go out of the money by maybe 1 strike if I really think it's running, 1 to 2 strikes. Or maybe let's just go at the money. I'll go up to 2 strikes out of the money and up to 2 strikes in the money. My strike price is irrelevant. I don't need to worry about delta. I've already taken care of that with the out of the money. I don't need to worry about probability. Volume, I'm going to want some, but if they just had earnings, there's volume on both calls and puts at this point, and open interest as well. Not necessarily looking for a target, but you could use the current or previous option volume to see options that have grown at least, traded at least 100% or more than their 90-day average. You're not going to worry about implied volatility because the stocks would have different effects. Some are going to be high, some are going to be low, depending on the earnings. What I'm going to try to do now is go to fundamentals. And I'm going to try to run an earnings date search. I don't know if the system can do this, but I'm going to try to run an earnings date search from between now and minus 1 week from now. Okay, and don't need to worry about avoiding index or ETFs. This might show up as no results. I don't know if the system can. Oh, it does. Okay. So we've got Delta Airlines earnings recently. We've got IDT, Fastenal, and Infosys. Now let me add a column in here, Thomas, make it easier for us all. I'm going to add a column. Anything that I can filter by, I can choose to view in my data field. So over here, in each strategy, you'll see the same type of view. The stocks are on the left, the options are on the right. All the stock selections should be the same. Naturally, what we want to look for here is the earnings date, and I always skip over it every time I come here. You'd think I'd have memorized it by now. This is one of those tricky ones that I've never actually memorized. Retained liabilities, revenues, income tax, earnings date, there it is, and ex-dividend date. It's almost right smack in the middle. Okay, so let's go ahead and submit that. We've got to close our window up and refresh the page. Okay, so most of these, it's only showing me the ones that came out one day or that came out today. And you see that Fastenal, if it came out today, it's up 532, so it has the potential to be running. Delta Airlines came out yesterday, but it's now since declined a little bit, 15 cents today. All right, so first thing I'm going to do, now that I have it, I incorporated all that matched my range in the money or out of the money, and Delta's a little tricky because it offers those 50-cent strike differences. And I was wide in my days to expiration, so I've got 35, 42, 49, 5 weeks out, 6 weeks out, 7 weeks out, 54, 53, 52 and a half, and so forth, okay? All right. So this one came up. The stock is above the strike. I don't know if this is necessarily running, but it is down today. It's not like Fastenal. So let me go to Delta, and let's go to big charts. All right, so this was a bad earning. So this one, I could incorporate this a little bit differently, and I should. Let me go back one. In addition to the criteria I just created, looking for positions that were between now, I wonder if I can open it up further. Let's try 2 weeks from now. Minus 2 weeks now, since it's been passed. You see how the earnings date shows up as a negative. I'm going to try minus 2 weeks to open this up. But we're looking at calls, and you're looking for ones that have run. So I'm going to look for something that's up near the greater 90% of its upper Bollinger Band, a little technical there, and also where the MACD has been over by at least 2 or 3 days. Positive MACD signal. MACD over the signal line. Okay, let's get our bullish criteria in there. Nothing. That's strange. I figured Fastenal would still be in there. I don't think I broke it by using a -2, but let me try. With that move today, I have to assume that Fastenal was up above upper Bollinger Band and MACD, but maybe it isn't. Maybe it was so driven down that it didn't have a chance. Let's try 80, and let's just take out the MACD for the moment. Oh, there it is. Okay, so this is the mover today. It came out today. It's running. So I just took the strike that matched that basic criteria, Thomas. No more than 2 strikes in, no more than 2 strikes out. I believe, yeah, it just gave me this particular one due to the volume and the open interest factors as well. And I'm using percent, not strikes. I'm using the percent. So the 36.3 is the one that's closest without going too far in or out of the money. Go to big charts. The stock just started the run today. There's your huge gap up in price. So why am I going here? Well, this is the one that matched that criteria. I can't get it to -2, Thomas, but I got it to -1. Now, we see that it was in a decline and then it had the sudden shoot up, and the expectation is, what if it continues? Okay, so you're looking at the chart and you're saying, this one is running. I think it's going to continue to run, and I think a good price of $38.50 in the next 15 to 20 days. This is not a recommendation or suggestion, ladies and gentlemen. This is not my prognostication. There's going to be maybe a little bit of pullback, but then it may come back up. But let's say, Thomas, your target was $38.50 sometime in the next 15 to 20 days. What I would do at this point is, under long call, I'd go to the long option finder. This tool is going to allow me to put in the stock, my expected price, $38.50, how much I'd invest, so let's say $1,000, why not, buy $1,000 worth of calls, and the expected date 15 days away, let's say on or around the 25th or the 28th. Yeah, let's go further. Let's go out to the 30th, October 30th, with this increase, and it's running. Let me put it up to $38.50. Okay, let's go ahead and submit that. So, oddly enough, it's a different expiration because I went a little bit further out in time, but it's pretty close. Actually, no, it was the same. I apologize. There it is. If the stock goes up to $38.50 as I'm expecting, based on the results of the earnings, other sites you might be using, such as Vantage Point, which Charles might be doing, what this tool did is it went out, looked at all of the options on FAST that would still not have expired after our target date of October 30th, and it shows us which one would give us the best profit, theoretically, based on Black-Scholes pricing and more, if the stock did hit our target date, target price on our target date. That instant it grabbed all of the options, and it showed us that November 36.3, 35 strike for November 15th expiration. We could afford 8 contracts, and this would be a 93% return on those long calls. And how did we get to this point? Well, we started off in the search. We set up a criteria to go ahead and look for the earnings date between now and -1 from now. Oh, it erased it, didn't it? No, it kept it. It kept it. I'm sorry. And -1. And then to get something that was bullish, because Delta wasn't really bullish, we put in that Bollinger Band range, seeing something that was near the upper range or above 100% of its Bollinger Band range only. Okay? But I wasn't positive if this was going to be the best strike. I want to look at the stock chart at that point. Use your voodoo that you use, Thomas, and see where your projection is going forward. If you think it's going to continue to run, get a price target for whatever time frame you think is a reasonable price target. Go to the long option finder, put in that criteria, your stock symbol, your expected target, investment amount, and your expected date. In that brief instance, the tool will show you which option would give you the best bang for the buck if the stock did hit or be near your target price on your expected date. All right, so let's take the long put. Not currently one of my strategies on our webinar account. No problem. Let's go to other strategies. For the moment, we'll take out Iron Condor, and I'm going to enter in long put. Just add that in. Those are the 23 different strategies I mentioned to you earlier in the presentation. Okay, so there we go. Now, save that. Go to long put, same search, Thomas, just with the one thing reversed on the Bollinger Bands, right? So we're going to clear all the filters. I was, 30 to 45 days out in time. That can give us up to 5 or 6 weeks of potential weekly series or standard expiration as well. And you could shorten it, of course. That's all dependent on you. I'm going to keep that percentage, no more than 2% in or 2% out of the money. Basic liquidity, option volume today, and some basic open interest. Into the technicals, I want it to be at the lower range, let's say less than 20%, blank to 20 of the percent BB20. I'll show what that means in just a second, and the bandwidth also, so it can be a little bit, there's a pop-up for all the filters and PowerOptions, but I'll show what that means in a second. And fundamentals, earnings date between now and -1. What should we see? Delta. Infosys, okay, that's a -1 too. All right, so there's the delta. We had it yesterday, the day before. Oh, I didn't add the column back in, so let's go ahead and add the column. So there we go. Practice makes perfect. So now I know I'm halfway down and found earnings date in less than 2 seconds this time. Fantastic. All right. Close our window to refresh our page. Infosys was the other one that was today. I'm sorry, like Fastenal. Okay, so yesterday's earnings, DAL's down, not a lot, but again, we looked at the profit and loss chart, and it was down a little bit more here, had a big drop there, and it kept coming down, coming down, coming down. Okay, so we've got a little bit of drop from the other day. Actually, it was up a little bit the other day, but the MACD didn't cross. It's still showing negative. So in this, if now you think it's likely that DAL might drop down to 51 or $50.50 again in the next 30 days. Go to Long Option Finder, DAL, let's call it 50-50. Again, not a recommendation or suggestion. This is hypothetical based on what the analysis would be, doing chart reading and more for your personal preference. And here we see that the 1st of November, 21 days out, would give us a better bang for the buck last time. I've focused on 30 to 45 days out in time roughly, but the 21 day out 54 strike looks like it would give us the best bang for the buck if Dow continued down by October 30th, was trading around $50.50 or so along those lines. Okay, so that's something to consider there as well. That's how you would do it. You'd go to the chart, get your estimation, and then from there you could run it. But again, as I mentioned to you, that search screen you do, keep it very simple. Clear out the filters. There we go. Clear out the filters. Hit clear filters first. Put in your desired expiration. I'd probably stay in this range, in or out of the money, just because usually, unless you're expecting a significant move, Thomas, in a really short time period, you might go out of the money for more bang for the buck. But again, if you're just thinking of a 5, 4, 3% move continuing the run after earnings for a 15, 20-day period, keeping it at the money is usually going to give you the best results. If you expect a 10% movement or 15, yeah, let's go out of the money. But again, it all depends on your expectations looking at the chart. Most important, okay, so then for bull calls, for long calls, want to look for that percent BB20 of greater than 80, and for the long puts, you want that percent BB20 to be less than 20. Switch over. What does that mean? It means where is the stock in relation to its upper Bollinger Band and its lower Bollinger Band. So this had a Bollinger Band breakout to the negative. Earnings had a little effect, but it was down 15 cents today. But we are within 20% of the lower Bollinger Band. It's down and depressed. This would be that 90 to 100%. So back in September, we were looking at DAL being up near the upper Bollinger Band and almost having a confirmed Bollinger Band breakout, but it didn't quite hold it in that case. You want to see a close above and then another close above the following day to have a true confirmed Bollinger Band breakout. Now, this was a breakout to the downside. It closed, let me clear that up. I'm sorry, folks. It closed below the low Bollinger Band here, then again here. It started to fight back, but kind of just wanted to keep going down. Fought back a little bit here, so it'll be interesting to see what happens the rest of the day. Okay, had a good move sort of yesterday from its open because of the earnings there, but it still got a negative MACD as well. Okay, so that's what the Bollinger Bands are. It's the relation of where the stock is to the Bollinger Band, and that's why you want to look for something that's running, as you mentioned, Thomas, downward here. I'd look for the greater than 80% BB20 for your long call screen following the earnings run for something that was running up and was still up as well. That's how I would approach it. I will try to talk to Ernie next week regarding your question. He's more efficient with the Bollinger Bands than I am, to be honest with you. He uses them more often. He also trades more long calls and long puts directionally following our Bollinger Band default search for long calls and long puts. So I'll see what thoughts he has on that for us, and I'll get back to you probably next week as well. Okay? All right. All right, some comments here. Just scrolling through. Okay. All right. Good, good. All right, so if you have any other questions about that, just let me know. Let's, oh, Sam says he's covering with the 300 strike puts in SPY just in case a new negative news comes out or something else negative comes out after the positiveness of the trade discussion this today. Sam also comments related to Thomas' question. I've seen a stock that has a big move after earnings. It fades the next day for a retracement and reestablishes its hold. And that is what I have seen as well, especially even in the Bollinger Band breakout, Sam. I see them break out above the Bollinger Band for a confirmed Bollinger Band breakout. Then there's an easing. There's some perhaps profit taking on that. And then it starts to pull back down. But then it starts to recover and move back up. And that's why I push the expiration to 30 to 45 days out in time. Let's see here. Let me go back just to a long call search. I'm going to try to isolate something very specific before we get to Guy's question. I'm going to clear the settings again, and I'm actually going to go 30 to 55 days out in time. And I'm going to isolate it to just one strike out of the money, because I only want to see one option for each stock that matches this. What I'm going to look for is something that sort of matches what Sam and I are looking at. Without using the earnings here, I'm going to look for something that's above a 90% now, above 75% Bollinger Band, but has a positive MACD cross of at least 5 days and where the MACD is positive. Okay, so I'm looking for something that has recently crossed and is still positive. Marathon, that's probably a good one. And the earnings were 10, 15, 20. Good, good. So let's check Marathon first. Okay, and I'm not sure if this is going to be related to earnings. We saw that the earnings were a little while ago, and that's where it is. See, this is what I tend to see consistently, not 100%, not 90%, but here is the earnings, I believe, on September 20th. Good gap up. What did it also do? Confirmed Bollinger Band breakout, what Ernie looks for. And then what do you have? You have the easing, same thing as Sam's talking about. Okay, but of course, if I had bought here, I'm still at a profit. And then after the easing, we start to see it continue the run. And there's going to be hiccups there with outside market forces, but this is sort of profit taking and maybe some easement as well from October, beginning of October, October 5th, right? Sort of some of the news that came out then. We saw some easing in the market, but it wants to keep running up. This might be a good look, Thomas, for something, that quick criteria I just put in, something that had earnings recently a few days ago, but had that positive crossover by at least 5 days, is a positive MACD, and is up still near that upper 90% of its Bollinger Band. That might give you more of a longer term one with earnings that were maybe 30 to 40 days ago, and it looks like it's continuing its run. That's another setting you could consider, using the technicals a little bit more as far as that goes. DHT Holdings also had, that's a $7 stock. Let's not mess with that one. Oriental Financial Group, don't know what they've done, but they had earnings 10 days ago. They match our technical criteria we were just looking for. Yeah, we didn't really get a confirmed breakout, so the earnings, some other news must have just come out today that pushed it up, or just in relation to the others. But 10 days ago, earnings actually didn't look that strong, but it did have, what do we see here? Related to this, a little bit different. What do I have? A confirmed Bollinger Band breakout, closed above opened and closed above, opened and closed above, opened and closed above. It's pretty good. Then what do we see? A little bit of easing. And yeah, so here, if I was 45 days out in time, I might still be looking at a decent profit depending on if I got the 22 strike and it's now up at 23, depending on the cost at the time. Harder to look at a, uh-oh. All right, hold on. Sorry, folks. There we go. Good, good. Okay. Seemed like GoToWebinar wasn't reacting. So that's another thought you might want to consider. Let's review that again, Thomas. What did I do? We extended the time frame. I just looked for one strike out of the money to find the stocks I want. Now that I have a projection going forward, I'll try to see what it is. But I was just trying to illustrate what Sam and I were talking about, what Sam commented on what I was talking about how we see that Bollinger Band breakout, then we see a retracement, and then it usually recovers. You have a really strong earnings, then there's profit taking, and then you start to see it run again. So we look for a higher Bollinger Band range again, up to 75% near that upper band, within 75% range of that upper band, and a good MACD crossover with a positive MACD line above the convergence line as well, but also above the signal line by at least 5 days, a consistent run. Okay, and I do the reverse. I'd want it under and negative for the puts and percent BB20 less than 25. That would do the trick on the puts, I believe, for what you're looking for. Now, again, you might find things that had earnings 25 days ago, 13, 131, 32. But it would help you with sort of the charts there to find the issues you might be looking for and thinking if they're going to continue the run. Consider, though, of course, that is strange. Someone commented on it. You're right. It's absolutely strange. Haven't gotten an update on this. It might be a different. It might only report twice a year if it's a foreign-based foreign company such as Canada. But it's 131 days, so we'd think we'd have it every 90 days. You'd have earnings every 90 days. In this case, it's 131. So I will check that SBGL, because sometimes those other certain types of those companies that are still based out in Canada but trade in the U.S., they only have to report twice a year, semi-annually instead of quarterly. Okay, and that's about it. That's what I'm going to go through, Thomas. Don't worry, I'll have that all recorded for you, and I'll get you further thoughts once I talk to Ernie next week as well.